Alright, so as promised, I was going to make a video explaining why I made the investment choice that I made and why it's wrong. I think that most people, especially if you're working with low funds like this account is, really need to see this is because we over leverage ourselves a lot. And I'm not saying that I leveraged myself, that's just one of the issues, but because I actually didn't leverage myself at all in this account because I don't have the ability to yet, don't have enough money. But we have a tendency to over-leverage ourselves, and we have a tendency not to look at the risk-to-reward ratio. All we want to do is look at, well, I can make, $200 or $300 in 2 weeks. Great. Well, not so great, and I'll explain why. First thing I'm going to do is I've got these two charts up here. We've got the SPY on the top, which tracks the S&P 500, and the VIX on the bottom, which is what I actually based my derivative off of. The VIX is real complicated. It'll be difficult to explain in this video. If you don't know what it is, I highly suggest that you go look it up and do a Google search, read about it. It's an extremely good indicator of market sentiment and direction. So, if we look at the SPY, we've got, I've drawn what I and most traders would be able to tell. This support line we dipped below right after our crazy debt deal, went right through that support line without too much trouble, bounced underneath it, so it was resistance, right, shot back up over top of it just before October 21st on this graph. Now it became support, right? We had a nice little bounce off of the support level, and actually almost 2 bounces, and I'm sitting watching this thinking, that would be, I feel like the market is going to stay above this support level for the intermediate trend. I have no idea what's going long term with all these swings in the market. I think that I've heard a lot of people say it's going up, I've heard a lot of people say it's going down. The crises in Europe, up, down, it's been a roller coaster ride. So I'm going to transition down to the bottom chart, the VIX. Basically, the easiest way for you to think about this, if you don't understand how the VIX works, is think of it as an inverse to the market. As the market goes down, the VIX goes up. As the market goes up, the VIX goes down. That's the easiest way I can explain it to you. So, if we look at October 21st, and you can see that the VIX is winding down its volatility, right? Winds down its volatility pops up because we have that huge gap down day where we went all the way down to the support level, and then it winds down again. This has kind of been the Euro sort of cycle. We have that news that comes out, market tanks, then the volatility winds out, or market pops, volatility sinks way down, volatility finally comes back to equilibrium level, right? Well, if you look at the price line that I drew on here, the 3250 line, that is where I kind of felt like the equilibrium line was real close to. In fact, I felt like it was underneath it. If we take a look at the day after October 21st, you'll see that the volatility is actually sinks all the way down to the 30s, and while the S&P is up in the 125 to 126 range. So when we're in that 125 to 126 range, at least short term, intermediate, we can expect volatility to be underneath that 3250. My bias, based on all the explanation that I gave you, watching volatility wind down, watching the news cycle in Europe, was we're going to be in that 124 to 128, 126 range by the time that this expired. So, I've got my trade plan. I'm thinking this is a great idea. This is a solid plan. I feel like it's going to be a winner. Doesn't matter because this next part I'm getting ready to show you. So, I had my bias, right? VIX is gonna be sub 33, which is what I'm saying is going to be the 24-28 range. So I went with the bear call spread. If you don't know what it is, I'm going to throw it up here a little bit. Once again, I highly recommend you go start reading about options. They're a great way to leverage your money, leverage your buying power without having unlimited risk. You know, you've got that finite risk involved with them. So I sold 3 November calls and I bought 3 November calls. Sold them in the 32.50. I bought them in the 35. This is called a net credit, right? So here's the math behind it. I got $648.71 for the 32.50s, and I paid $480.28. So I got $168.43. Great, I got paid up front. You know, most people are going to be thinking, great, it's awesome. Not so much. Here's why, right? A lot of traders will do this, and they won't do this next part. And I'm telling you, I've been investing for a while, and I don't know why I didn't do it. Like I put on my little blog post, I guess I was all excited, you know, take no prisoners, get out there and just do it. Because this is the first time I've done something publicly like this, and I'm actually really enjoying it. So anyway, this is the part that a lot of traders miss out on, and something that you really need to do. Figure out our maximum risk, right? Well, I've got a $2.50 times the contracts, right? So $250 times the 3 contracts gives me $750 minus my net credit, which was $168, gives me $582, right? So I'm an infantryman in the military. We're not the greatest with math, most of us. I'm better than some. I'm a big rounder, so right. So we got a $600 risk, we'll call it, right? You know, let's round our reward too. We can call it a $150 reward. You could call it $200 if you wanted. Even still, that is not going to be enough. 4-to-1 risk, don't know what I was thinking. Now, I'm glad I'm recording this video before market open on Monday. I wasn't going to do it until the trade was over, but I felt like, you know, psychologically I'm going to slip in excuses of why I did this or why I did that. I want to get it out there before the trade resolves itself. So, thanks for watching, and we're going to see how this all plays out. I'm either going to get hammered in my capital, which is horrible. I think I've risked like 90% of the account balance on this, which is a horrible idea. You should never do this. Never. I'm used to trading with accounts that are much larger. Didn't really even, like something like this, I wouldn't even really had to worry about. And, well, you know, just got to get used to trading with that lower account. So, thanks for watching, and we'll see where this thing goes come expiration this Friday.